Welcome back. This is the gold market review for the 22nd of February. The gold market presented significant strength moving upwards in the most recent daily sessions. Gold has moved in positive territory for the past 3 consecutive weekly sessions, while it's currently trading at a new 2022 high as a result of the recent bullish interest from traders. The global interest for the gold market remains at extremely high levels, especially at times such as the current, where geopolitical uncertainty seems to be the main focus. In this report, we will be looking into the most important news moving gold prices at the moment. We will finalize with our gold technical analysis and provide a complete report for traders to work with. Enjoy the report. In the past days and in the past week, gold's largest daily movement was carried out on the 17th of February. Gold strengthened in the European session on Thursday the 17th with no significant economic releases to validate the movement, except the FOMC meeting minutes that took place the previous night. Through the report, it was confirmed that the inflationary pressures in the US have broadened in the second half of 2021 and may have now impacted sectors that were not affected by the pandemic in the first place. We must also highlight that the US inflation rates for January 2022 increased further, possibly paving the road for the FOMC to start enacting interest rate hikes. Furthermore, analyst speculations on the path the central bank may select can be strengthening or weakening the USD depending on how hawkish or bearish the sentiment is. At the moment, the FOMC seems to follow a more cautious or patient approach, which may be restraining the US dollar but pushing gold prices higher. In the past week, the USD index gained marginally, while gold surged remarkably, implying the correlation between the two remains weak yet positive. Understanding when gold's volatility increases can provide hints as to what may be motivating traders in the short term. The main attraction for the gold market and the global media scene at the moment remains the developments on the Russia-Ukraine subject. In the past week, and specifically on the 18th of February, the Donbass area in Ukraine announced evacuations with people moving into Russian territory. Gold seems to be absorbing positive volatility from developments in Ukraine due to the fact that the tensions could be intensifying, but also because it can lead to further economic risk. Europe's trade relations to Russia in terms of energy sources can be tarnished, while the subject could add up to already worrying inflationary pressures. As noted in our previous week's report, in the scenario of escalation of tensions, we may see gold prices picking up, while in a de-escalation scenario, gold prices may return lower. As a final note, the upcoming economic releases from the US in the days to come have the potential of moving gold prices, and caution is advised if traders are to place orders prior, during, or after the releases. On Wednesday, the 24th of February, we get the GDP second estimate rate for Q4, the weekly initial jobless claims figure, and the new home sales units for January. On Thursday, the 25th, we get the consumption adjusted and durable good rates for January, while the final University of Michigan economic sentiment figure for February will also be released. On Tuesday, the 1st of March, we get the important ISM manufacturing PMI figure for February. Moving now to our gold technical analysis, please note this is the 4-hour chart. The price action has recently reached and tested the R11910 resistance level, but returned to lower grounds eventually. Note, the R11910 is the highest level gold has reached since June 2021. If this level is surpassed, then the R21927 line is, in our view, the most probable stop for traders. However, as our fundamentals subjects seem to remain intact, we have added also the R31950 level, which can become a target in a strong bullish interest scenario. In case the precious metal is undertaken by a selling interest, the S1 1886 level can be reached first, while the S2 1865 level is our next level if the selling is to continue. Our final support level stands at the S3 1845 hurdle, which can be reached in an extensive bearish trend line. Please note the RSI indicator has dropped below 70, implying some selling has taken place in the most recent hours. Overall, gold has breached new year high levels consistently. Thus, we tend to support an upward bias as our personal view. That's the end of this report. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.